my NIO price projection for 2030 is actually around $10, and I think that's a little conservative as well. So despite what people may have assumed based on my last video, I'm actually more bullish on NIO than people may have realized. They recently announced their first quarterly report for 2024, and after cutting the estimates from 31,000 vehicles to 30,000, they ended up being right on the money. They delivered 30,053 vehicles in the first 3 months of 2024. And a good sign for NIO is actually their days of inventory, which is an industry measure of how long a car sits before being sold, is 49 days compared to the industry median of 82, which beats over 76% of auto companies right now. So some good news there. NIO is also ranked 19th on the list of the largest global EV manufacturers right now by volume. Some good news for the industry as a whole is actually the proportion of EV sales to ICE sales, internal combustion cars, is increasing a lot. And I've seen some reports say that it could reach 86%. That 86% of all vehicles sold in 2030 would be an EV. And I personally think that's a lot, like really, really high. But for context, it took 6 years to grow the EV market share from 1% to 10%. And over the next 6 years, it's being said that we could go from that 10% to around 60 to 80% from what I'm seeing on average. I'm seeing as high as 86%. I'm seeing as low as 30%. But on average, I'm seeing that the projected EV market share for 2030 is about 60 to 80%, a little bit closer to the 60% on average. And so increasing their market share to grab a slice of that pie is definitely NIO's key focus right now. And going back to that quarterly report they just released, it also says that 11,866 vehicles they delivered in March equates to a 14.3% year-over-year growth. This is where my problems with NIO start, is that this seems like a good number, and it is, and don't get me wrong, growth of any kind is good, but when you compare it to the industry, BYD grew over 33% over this time, and Tesla did 18% over this time. And obviously the key caveat is that NIO only just started making cars in 2014, whereas BYD and Tesla have been doing it since 2003. And the problem with that is Tesla and BYD are more mature companies, okay? They've been around a little while. And NIO is a very immature company. They really just started selling and getting some revenue. And that's the problem, is NIO is in its growth phase, and it should be putting up numbers way larger than BYD and Tesla, who have been in the space a little while. And, that's the problem. And that NIO did have good growth. They grew 127% in 2020, 25% in 2021, and then that fell to 9.6% in 2023. And so even though they're touting a 14.3% year-over-year growth, which isn't that great in the first place compared to the industry, it looks like it's going to fall. It's been falling annually for the past 3 years. And this is the big issue that I have with NIO right now, is that the EV industry as a whole, I think a lot of people were a little too bullish and their estimates were a little too high. And so even though I think it's going to grow a lot, it's just not going to grow at a rate as fast as everybody thought it was. That's a major hurdle for NIO. The big issue is competing with BYD, actually, because BYD is actually cutting prices and it's launching cars that they are delivering at $25,000 at a profit, which is insane. I mean, NIO is losing about $35,000 per car right now. But like I said, a lot of that's just R&D spending. They have 2 sub-brands coming out. They've invested a ton of money into their business. And so hopefully those investments are going to pay off this coming year. And, hopefully those sub-brands can supplement the NIO brand and improve their growth rate to match or exceed that of the industry. Really, investors looking to buy NIO right now will be essentially betting that NIO is going to start to increase their market share and capitalize on the projected EV sales growth coming down the line in 2030. And I've made my, around $10 price projection for 2030 based on that assumption as well, that EVs are going to go from their current 15.8% market share, which is the market share today, to about 60%, which means a 3.7 times increase. And so if you multiply the NIO stock price, the current NIO stock price, by 3.7, you get a stock price of $17.30. So if they can maintain their spot as the 19th largest EV manufacturer, and the EV share goes from 15.8 to 60% in 2030, then you should be sitting around a $17 stock price by then. And that's all good and fine and dandy, but the issue I have with NIO stock, again, is I urge people to be cautious because there's a lot of risk and uncertainty in the EV industry right now. And personally, I think the projected EV market share of 60% by 2030 is way too optimistic. And, if this is the case, then we can expect to see some revenue projections for EV companies start to get cut again, start to slow down, and again, create some downward pressure on EV stock prices, which could hinder returns. And NIO specifically is burning just through a ton of cash on R&D right now, and their underlying fundamentals are certainly not as strong as I would like them to be. But if you're an investor and you think they're going to start increasing these deliveries over the next few years, you think their growth rate's going to pick back up, you think their sub-brands are going to take off, and you think that, EVs could be 60% of all vehicles sold by 2030, then honestly, if you can handle some short-term volatility, then picking up a few shares might not be a bad idea.